Well, overseas now, where the EU has elected its new finance minister. Now, it comes as the European Commission announces new measures to try and deepen Eurozone ties.
Happy to announce that the Eurogroup has elected my successor.
One Eurogroup chairman introduces the next. His eyes firmly set on the 2.5 years he'll serve from January.
We have a very unique time window.
Mario Centeno beating other Finmins from Slovakia, Luxembourg and Latvia in the race to head the EU's most powerful economic policy-setting body. And with a CV to match, a Harvard-educated economist credited with dragging Portugal out of its debt crisis and the Eurozone bailout programme, for whom a strong grip on public finances is not at odds with what he calls inclusive prosperity.
Certainly within Portugal, the austerity measures have been eased back significantly in the last 2 years under Mr Centeno. And I think so this marks quite a significant shift for the region as a whole.
This week sees the European Commission due to announce sweeping measures for deeper Eurozone ties. Centeno, the man who may play a part in ushering in a Eurozone budget, as favoured by France, even a Eurozone finance minister.
We think it's very positive, very, very positive, the efforts and the detailed roadmap put forward by President Macron. The same thing for the long-standing position of Germany.
Germany has opposed the budget idea, but along with France and Italy did support the election of Centeno, whom earlier this year its former finance chief Wolfgang Schäuble dubbed the Cristiano Ronaldo, the star footballer of finance ministers. In fact, Centeno is said to like rugby and cooking. 2018, the year perhaps when the prized dish of greater Eurozone integration begins to take shape.
And let's stay global and put the spotlight on the year that's been and the growth hotspots for 2018. Jack Lowenstein is the co-chief investment manager from Morphic Asset Management, and he joins me live in the studio as you normally do each week or every couple of weeks around. Jack, thank you for being here. Now, as we head towards the end of calendar year, let's take a quick look back at 2017, where the value was to be found, whether you found it, and maybe where you missed out on that value. Let's start with US equities.
Well, the
first.
US equities, obviously, it was the year of the FANG, and I got to say that we did not fully. We did fairly well. We didn't do as well as some people who were more focused on those opportunities.
These are the big tech stocks.
The big techs, which is not really our stomping ground. The other thing that happened this year was the Australian dollar surprised by going up. So we began the year at about 72, and it's now about 76. So that was a bit of a surprise. Where we found value, we got most of our really good gains out of Japan.
Yes, you've been heavily involved in Japan, haven't
and that
you?
was
We've
probably
talked about that.
That probably made our year, to be honest. Even though we weren't in some of those very, very high beta tech names.
Could we say that you were prescient about Japan? Was it luck? What did you see that led you into Japan that then came good?
Look, I think everything was going its way, to be honest. The economy is definitely strengthening. Unemployment is at record lows. You know, there's 2.8% unemployment, and there's 1.5 jobs for every applicant. That's how tight the market is there. And so but the other thing I think we saw going on in Japan was this inexorable improvement in corporate governance, which means
Which was a long time coming.
It's a long time coming. But in Japan, when things are a long time coming, they might keep coming for a very long time after they start coming. And that's
which is a good thing.
A very good thing. And we think we're on a long road of improvement there, which means shareholders will participate in the benefits of business more.
And so do you think, well, let's stay with 2017. How did the rest of Asia fare? Because there's been a lot of mixed sort of reports about India. You had been big in India, but you've pulled back a bit on India.
Yes, and again, we have, and we missed one important thing in India, which was we weren't long Indian banks when they literally went up 25% in one day across the board.
And didn't fall back the next day?
They've fallen back a bit, but not too much. But we did very well for some of our infrastructure-related stocks early in the year, and then we basically started leaving. We think India's now pricing in more growth than it can achieve. So we're substantially reduced in India. The other thing that happened over 2017 was that China had a really strong run, which seems to be unwinding now.
Are you talking about equities?
Equities,
Yeah.
yeah. I mean, the Chinese market did very well. And that seems to be winding down now. I think the view is that growth, there'll probably be a bit of a growth shock, as in no growth. The Chinese growth will slow further than expected, and that may precipitate a bit of a credit crisis at some point. Mind you, people have been predicting that for a long time, has yet to show up.
Will you stay invested heavily in Japan in 2018?
We will. Our present view is we definitely will. We expect the early part of 2018 to be a good year for equities overall. The economic
Why is that? Because developing economies are all doing well growth-wise?
And developed economies are doing very well. So we think that's going to be enough to keep things going. My concern is that everybody, this will be the longest bull market in the US, I think, ever, but if it continues to about August next year. Now, admittedly, it's not the biggest bull market, but it's the longest one.
Does that scare you at all, or do you think because it's not the biggest, then that's okay, there may be some checks and balances built into it, or do you think there is a bubble there that will burst?
I think there's not a bubble, but I think valuations are getting stretched. And when I say there's not a bubble, I think that we've never known interest rates to be this low. So the correct level of valuations for a very low interest rate environment is still somewhat unknown. So I'm not by any means panicking. In fact, I think we're fully invested. We think the market will continue to go up next year. But at some point next year, it may peak out.
All right. Now, in China, what is your view for 2018? Because, I mean, there's a kind of a growing concern about China through 2018.
Well, to be honest, we have only one direct holding in China at the moment, which is environmentally focused. We think stocks that are focused on improving the environment will do well in 2018 in China. And the reason for that is that when people get to a certain level of wealth, they start caring more about their physical environment they live in, the quality of the food and air. And so two of my colleagues are going up next week to China to see a rubbish dump. And at that rubbish dump, they burn waste to create electricity. And that's an alternative to dumping rubbish in landfill. And there's no spare land in China. And also it's very polluting. So that kind of thing could do very well, even if the market as a whole doesn't.
What about the governance issues of investing in a country like China through equities?
Look, let's be honest about it. There are governance problems in China, but 95% of companies in China do not have governance problems. It's the 5% that give the rest of the market a bad name. We think you have to look at things on a case-by-case basis. While you might not like the idea of governments controlling the major shares in business you invest in, you can be pretty confident that some of the incentives for fraud aren't there. So we actually don't mind investing in government-controlled companies.
Yeah, all right. Now, other sort of emerging parts of Asia, are you interested in other parts of our region?
Korea has definitely been interesting, and we remain interested in Korea. Stocks are still relatively cheap there. They're always cheap in Korea, but they probably deserve to be a little bit better priced than they are at the moment. Other markets I'm staying away from at the moment. I think that generally much of Asia is in what's called the middle income gap, where it's just struggling for growth.
All right, so what would be, say, a couple of key challenges for investors in 2018 in your view?
Well, the first key challenge is not panicking and giving up too soon. The second key challenge is making sure that when the market does roll over, they don't expect it to be a brief downturn. We think that this next major downturn will be quite a big one. So you've got to stay bold and then be very vigilant to exit at the right moment.
All right, so stay in there, but it's not necessarily a white-knuckle ride.
It always seems like a white-knuckle ride at the time.
All right, Jack Lowenstein from Morphic Asset Management. Great to talk to you. Thank you.
And if I don't see you again, happy Christmas.
Yeah, no, same to you, Jack. Well, coming up, the citizenship saga. Well, it sweeps up Labor now. Sky News political reporter Sam Maiden is up next with all the latest details on that saga. Stay with us.
At SCW,